Robert Kiyosaki, the renowned author of Rich Dad Poor Dad, famously said, "The rich don't work for money, they make money work for them." Have you ever wondered why he emphasized that? In the world of dividend investing, it is not just a myth. Once your portfolio crosses the $100,000 threshold, things begin to shift dramatically. At this point, your money works much harder for you through compounding. Dividends aren't just quarterly payments anymore. They are reinvested to buy more shares, which in turn generate even more dividends. Once this cycle starts, it becomes a powerful force that's hard to stop. In this video, we will show you why $100,000 is a pivotal threshold. We will also explain how to reach the first $100,000 with a reasonable contribution and numbers. At the end, we will show you one investment that can easily make you $870,000 and pay you $3,417 per month from an initial investment of $10,000. Now, let's take a moment to understand why reaching that first $100,000 milestone is so important. First, building up your earnings is like growing bamboo. In the early stages, they seem to make little progress, as most of their growth happens underground, developing a strong root system. For several years, you might see almost no visible change. But once the roots are established, bamboo can suddenly shoot up several feet in just a few weeks. Second, dividend investment is like compounding. In the beginning, your investment is very modest, so the dividend is relatively small. Don't overlook anything that's small. They can easily grow bigger. Think of it like a snowball. It is very small when on top of the hill. As it rolls down the hill, it attracts more snow and increases in volume. So the snowball will run much faster than before. Once the snowball reaches the size of $100,000, it will grow rapidly. It is not an overnight transformation, but with consistency and patience, it becomes a powerful and rewarding process. Let's run some numbers to understand why hitting $100,000 is a significant milestone in our financial journey. For example, you plan to invest $10,000 every year into the S&P 500, also known as the market. It has an average return of 9.48% per year between 2013 and 2023. We can take a 9% annual return in this example. In the first year, the initial $10,000 would produce $900. It is not a lot of money, but it is just the beginning. Compounding is long-term investment, so we don't get rich overnight. In the second year, your investment is not only based on $10,000, but a combination of the initial investment, annual contribution, and the first year's interest. They are adding up to $20,900. So, the return for year 2 is $1,881. This amount is more than double of the first year's return. By this speed, the investment is compounding. You will be able to hit the $100,000 milestone within 8 years. At the 8-year mark, we have a portfolio of $110,824, and the growth is $9,925. This is over 10 times of our initial growth. We can see the money started working for us much harder than before. In the 9th year, the balance becomes $130,210. This is a big jump from $110,824 the year before, and the annual growth is $15,804. Clearly, the snowball runs much faster than the first few years. If we continue to invest, we will reach our second milestone, $20,000, in about 12 years. In the 12-year mark, the balance would be $201,407. At first, it takes you almost 8 years to get to the $100,000 mark. Then, It takes almost 4 years to get to the $200,000 milestone. Down the road, the investment accelerates itself at a much faster rate. It works like a money-making machine. You will be paid off when patiently waiting for compounding. This is why $100,000 is a significant milestone for investment. Making money becomes a lot easier after each $100,000 milestone down the road. If you find this content helpful, please hit the like button and subscribe to the channel. Thank you so much. Now, let's get back to the investment. Why do we emphasize the $100,000 mark in the investment journey, and what does it do to you when you get there? Let's explore this with an analogy. In physics, we have a concept called escape velocity. It means an object needs a massive amount of energy to reach a certain speed so it can escape from the gravitational pull from the Earth. After that, the object can continue moving with far less effort and explore the universe freely. If we translate this phenomenon to finance, it means our investment growth and the dividend payouts are growing much faster than before, which is after $100,000. Now you're able to create new assets faster than you could ever save. You may not be able to retire from it, but you are getting closer. In the meantime, your mentality is not the same as before. Your hard work in the early career has paid off, and you start to see every dollar in your portfolio contributing significantly to its growth. Even if you don't add anything further, the potential of your investment expands. Your focus shifts from quick wins to see the bigger picture of long-term growth. You begin to view wealth building as a lifelong commitment and start making wiser decisions about spending and the people you surround yourself with. Dividend reinvestment is a powerful tool to maximize your earning for the long run, but often overlooked by investors. Instead of cash-out dividends you received every month or every quarter, you choose to use the dividend to buy more shares. Essentially, you are using the money the company pays you to buy new shares for yourself. If this cycle continues, you will have a bigger portfolio and more dividends as time goes. This growth may not be significant at first, but it will grow exponentially after certain points, like $100,000. Let's say at some points your investment reaches $100,000, and we define it as year 0. After year 1, you will earn $4,000 if the dividend yield is 4%. In year 2, your investment is based on $104,000 instead of $100,000. Now the dividend is $4,160. From $4,000 to $4,160 is a 38.67% increase without extra effort input. There aren't that many jobs out there that can give you that much paid raise. We can see the dividend income grows every year at a much faster rate than when you began the investment journey. It accelerates the process of wealth accumulation. Another strategy for protecting and growing your wealth is diversification. At the beginning, you may start with very little funds. You can only focus on a few investments. As your portfolio grows, it is a good idea to diversify your investment, making sure your eggs are in different baskets. Funds should be invested in different assets, like dividend stocks and real estate investment trusts. If you have a positive outlook for a specific industry, but not having enough time to pick the best stock, exchange-traded funds are always a good option for you. Diversification is about optimizing your investment within your risk tolerance. Here is a company that can grow your wealth exponentially. AbbVie. This is a global biopharma company focused on creating advanced treatments for complex health conditions, like autoimmune diseases, cancer, and neurological disorders. With well-known drugs like Humira and newer options like Skyrizi and Rinvoq, AbbVie is on the cutting edge of healthcare innovation, helping millions worldwide manage their health. Now let's see how we can maximize our profit from AbbVie's growth by utilizing the strategies we have introduced. The current dividend yield is 3.22%, which is very modest. However, the dividend growth rate was 14.08%, and share price appreciation was 12.76% per year in the past 10 years. If we invest $10,000 and reinvest all dividends you receive over time, this is how your investment would grow. At first, the growth would be very modest. Let's see when the investment hits the $100,000 threshold. It would be around the 16th year. At this point, the annual dividend is $3,773. Fast forward to the 20th year. The investment would become $178,883 with an annual dividend of $7,389. Very impressive. How about the 30th year? It would be $870,592, and the annual dividend would be $41,004. This is equivalent to $3,417 per month. We started this investment with only $10,000. Over the years, we are taking the advantage of time and dividend reinvestment. As time goes, the investment compounds and rewards us for keeping it patiently. The longer we stay in the investment, the faster your money grows. Eventually, we will be able to live off dividends. $100,000 is an important milestone in our financial journey and can be achieved by all of us. Thanks for watching. Good luck with your investment.